Building upon our historical understanding from the previous episode, let us now focus on the systemic barriers that have restrained Black economic advancement throughout the 20th century. The legacy of slavery and early discriminatory practices laid the groundwork for a series of policies and societal norms that continued to oppress Black Americans long after emancipation. In this episode, I'm going to discuss the hows, whys, and whats about discriminatory policies, i.e., redlining, segregation, and employment discrimination, which have severely limited wealth accumulation and access to opportunities. We explore how inequalities in education and housing have perpetuated the wealth gap, examining how these factors affect Black communities today. Redlining and segregation have been among the most destructive policies affecting Black wealth accumulation in the United States. Redlining refers to the discriminatory practice where services, financial and otherwise, are withheld from potential customers who reside in neighborhoods classified as hazardous to investment. Black residents primarily occupied these neighborhoods. In the 1930s, the Homeowners Loan Corporation created maps that graded neighborhoods nationwide to guide investment. Areas with high concentrations of African Americans were marked in red, signifying high risk. Consequently, banks and other financial institutions denied mortgages and loans to residents in these areas, effectively stifling investment and economic growth. This lack of access to credit meant that Black families were unable to purchase homes. Understand that home ownership allows individuals to build equity, benefit from property value appreciation, and pass wealth on to subsequent generations. Denied this opportunity, Black families remained renters, often paying more in rent than they would have in mortgage payments for similar properties. Additionally, because landlords in these areas had little incentive to maintain properties in neighborhoods deemed hazardous, housing conditions deteriorated, further depressing property values and quality of life. Segregation, both de jure, by law, and de facto, by practice, reinforced these economic disparities. Laws enforcing segregation in schools, public transportation, and housing ensured that Black Americans were confined to certain areas, limiting their access to resources, employment opportunities, and quality education. The isolation of Black communities from economic centers and quality infrastructure hindered business development and job creation within these neighborhoods. Furthermore, segregated neighborhoods lacked investment in public services such as sanitation, policing, and fire protection, leading to unsafe living conditions. The cumulative effect of redlining and segregation was a systemic barrier to wealth accumulation, creating a cycle of poverty that has persisted for generations. Think about it. If you can ask your parents or your grandparents about segregation, redlining, and how it personally affected them because they lived it, saw it, and learned to either overcome or adapt to it, do you not still think it had an effect on you, your wealth, and the ideas you had about financial wellness? Please understand that employment discrimination has significantly influenced income levels and job opportunities for Black Americans, perpetuating economic disparities. Historically, Black workers were relegated to the lowest paying, least secure jobs, often in industries with poor working conditions. Even with the passage of civil rights legislation, discriminatory hiring practices persisted overtly and subtly. During the early to mid-20th century, labor unions often excluded Black workers or segregated them into separate unions with less bargaining power. This exclusion meant that Black workers had limited access to better paying jobs with benefits and job security. In industries where unions were strong, such as manufacturing, this exclusion had a profound impact on income levels. In the modern era, employment discrimination has become more insidious. Studies have shown that resumes with white-sounding names receive significantly more callbacks than those with Black-sounding names, indicating ongoing racial bias in hiring practices. Additionally, Black employees often face barriers to promotion and advancement within companies, known as the glass ceiling effect. Wage disparities are also evident. According to data from the Bureau of Labor Statistics, Black workers consistently earn less than their white counterparts, even when controlling for education and experience. This wage gap contributes to the overall wealth gap, as lower income levels limit the ability to save, invest, and accumulate assets. Employment discrimination also affects job opportunities through occupational segregation. Black workers are overrepresented in low-wage service occupations and underrepresented in higher-paying professional and managerial positions. This segregation is perpetuated by factors such as unequal access to education, networking opportunities, and discrimination in hiring and promotion practices. The cumulative impact of employment discrimination is a significant barrier to economic advancement for Black Americans. It limits income growth, reduces career mobility, and perpetuates wealth disparities across generations. If you cannot get a good job and make good money, how can you build wealth and pass it on to your kids or grandkids? Better yet, how can you build something, like a business, or buy property like homes or land, without the basic foundation of a job that will produce a significantly higher income than the cost of your expenses for a living? Education is a critical determinant of economic success, and inequalities in the education system have a profound impact on economic gaps between Black and white Americans. Historically, segregated schools provided vastly different educational experiences for Black students compared to their white counterparts. Despite the landmark Supreme Court decision in Brown v. Board of Education, 1954, which declared segregated schools unconstitutional, many schools remained segregated due to residential patterns and local resistance. Schools in predominantly Black neighborhoods often receive less funding due to reliance on local property taxes, which are lower in areas with depressed property values. This funding disparity leads to fewer resources, larger class sizes, outdated textbooks, and inadequate facilities. Teachers in underfunded schools may be less experienced or overburdened, affecting the quality of education. These educational disparities result in lower academic achievement and graduation rates among Black students. Without access to quality education, Black students face challenges in gaining admission to colleges and universities, particularly more selective institutions that can lead to higher-paying careers. Furthermore, the lack of access to advanced placement courses, extracurricular activities, and college preparatory resources limits opportunities for Black students to compete equally in higher education admissions. The achievement gap that begins in primary education widens over time, leading to significant differences in educational attainment. Inequalities in education also affect vocational training and access to trade skills, which can provide alternative pathways to stable employment. Without exposure to these opportunities, many Black youths are left with limited options in the job market. Understand why education is essential to success. If you didn't know, access to quality education is foundational for long-term economic success. Education equips individuals with skills, knowledge, and credentials that increase employability and earning potential. For Black Americans, barriers to quality education have long-term implications on income, wealth accumulation, and social mobility. Quality education fosters critical thinking, problem-solving abilities, and adaptability, skills that are highly valued in the modern workforce. It also provides networking opportunities and exposure to diverse career paths. Higher levels of education correlate with higher lifetime earnings. For instance, individuals with a bachelor's degree earn significantly more over their lifetimes compared to those with only a high school diploma. Access to quality education also affects generational wealth. Educated individuals are more likely to have the financial literacy necessary to manage assets, invest wisely, and plan for the future. They can provide better educational opportunities for their children, perpetuating a cycle of prosperity. In the context of Black communities, limited access to quality education perpetuates economic disparities. It hinders the development of human capital, reduces competitiveness in the job market, and limits access to professions that offer higher salaries and benefits. By contrast, improving educational access and quality can serve as a catalyst for economic advancement and narrowing the wealth gap. Another significant barrier to wealth has been housing discrimination, black homeownership, which is a primary means of wealth building in the United States. Practices such as redlining, restrictive covenants, and discriminatory lending have systematically denied Black Americans the opportunity to purchase homes in desirable neighborhoods or obtain mortgages on fair terms. Redlining prevented Black families from obtaining mortgages insured by the Federal Housing Administration, FHA, effectively excluding them from the post-World War II housing boom that benefited many white Americans. Restrictive covenants were legally enforceable agreements that prohibited the sale of properties to Black buyers, maintaining racial segregation in neighborhoods. Even after the Fair Housing Act of 1968, which aimed to eliminate housing discrimination, predatory lending practices persisted. Black borrowers were often steered towards subprime mortgages with higher interest rates and unfavorable terms, even when they qualified for better loans. This led to higher default rates and foreclosures, particularly during economic downturns like the 2008 financial crisis. The inability to own homes in appreciating markets deprived Black families of the opportunity to build equity and accumulate wealth. Home equity is often used to finance education, start businesses, or provide a financial cushion in emergencies. The lack of home ownership also means less wealth to pass on to future generations, perpetuating the wealth gap. Moreover, living in neighborhoods with declining property values affects the community's tax base, leading to underfunded schools and public services. This creates a cycle where housing discrimination not only limits individual wealth, but also undermines the overall economic health of Black communities. And when you are living in under-resourced neighborhoods, it has a multifaceted impact on financial opportunities. These areas often suffer from a lack of investment, both public and private, resulting in inadequate infrastructure, limited access to quality education, and fewer employment opportunities. Under-resourced neighborhoods typically have schools that are underfunded, leading to lower educational outcomes for residents. As previously discussed, this affects long-term earning potential and access to higher education. Poor educational facilities contribute to higher dropout rates and lower college enrollment, limiting career prospects. Healthcare facilities in these neighborhoods may be scarce or of lower quality, leading to poorer health outcomes. Health issues can hinder employment, reduce productivity, and increase medical expenses, further straining financial resources. Employment opportunities within under-resourced neighborhoods are often limited. There may be a scarcity of businesses offering well-paying jobs, forcing residents to commute long distances for work, which can be a barrier due to inadequate public transportation. The lack of local job opportunities contributes to higher unemployment rates and economic stagnation within the community. Crime rates tend to be higher, which can deter investment and further degrade property values. Businesses may be reluctant to operate in these areas, reducing job availability and access to services. Residents may also face increased scrutiny and discrimination from law enforcement, leading to higher rates of incarceration that disrupt families and communities. Access to amenities such as banks, grocery stores, and recreational facilities is often limited. This creates food deserts where residents lack access to fresh, healthy food, impacting health and well-being. The absence of banks leads to reliance on alternative financial services with high fees, hindering financial stability. Lastly, environmental factors also play a role. Under-resourced neighborhoods may be located near industrial sites or areas with higher pollution levels, affecting residents' health. This can lead to chronic illnesses that impact the ability to work and increase healthcare costs. Overall, living in under-resourced neighborhoods limits economic opportunities by creating barriers to education, employment, health, and safety. It traps residents in a cycle of poverty that is difficult to break without significant intervention and investment. Systemic barriers in policy and practice have profoundly impacted Black economic advancement throughout the 20th century and into the present day. Discriminatory policies like redlining and segregation have severely limited wealth accumulation by denying Black Americans access to home ownership and confining them to under-resourced neighborhoods. Employment discrimination has influenced income levels and job opportunities, perpetuating wage gaps and limiting career advancement. Inequalities in the education system contribute significantly to economic gaps. Access to quality education is a crucial factor in long-term economic success, yet many Black Americans are denied this opportunity due to underfunded schools and systemic biases. Housing discrimination has further limited wealth building by restricting access to appreciating assets and the benefits of home ownership. The impact of living in under-resourced neighborhoods extends beyond individual households to affect entire communities. It creates environments where economic opportunities are scarce and barriers to advancement are numerous. These systemic issues are interconnected, each reinforcing the other to maintain economic disparities. Understanding the depth and complexity of these systemic barriers is crucial for developing effective solutions. By acknowledging the historical context and the ongoing impact of discriminatory policies, society can work toward creating equitable opportunities that allow all individuals to achieve economic success, regardless of race. Only through deliberate and sustained action can the legacy of systemic discrimination be overcome, paving the way for a more just and prosperous future.